And staying with health, and Australian Unity, the mutual providing a spread of services covering healthcare, financial services and retirement living, reported today. The results prove it's pulled through the GFC and now faces a future of handling the many reform agendas in its various business sectors. Well, earlier I spoke to the firm's chief executive, Rowan Mead. Rowan Mead, welcome to Lateline Business.
Evening, Tiggy. Good to be here.
Well, your results until this year were sort of flatlining due to the financial crisis. Now a 17 million profit. That seems a pretty good result, really.
We're very pleased with this return to profit. There's still some lingering effects in a company such as ours from the GFC, but this is both a pleasing set of financial results and perhaps more importantly underlying some very positive developments operationally in each of our business areas, Tiggy.
Did being a mutual help you through the financial crisis?
Oh, I think it certainly did. We were able to take a steadier view than perhaps some others were able to during the throes of the financial crisis and continue to invest in services for members and customers and therefore be in a position where we could actually continue to build the platform.
I think $17 million translates to a return for your members of about 6%. In the long term, you're looking at delivering 10% for your members. Good as these results were, is it a case of sort of nice try but still a fair way to go?
Oh, there's always more to do, Tiki, and yes, we do have a sort of internal benchmark in terms of the guardianship rate of return on the assets of the group, the return on capital employed after tax, and we're still yet to re-achieve those levels that we were at before the financial crisis. But the underlying operations leave me feeling very positive about our prospects in all regards, including achieving those financial results in future.
Now, you've announced today the launch of a $200 million retirement village investment fund, as opposed to your existing healthcare fund. Now, a few players have moved into this space and they've struggled through the financial crisis. Are you going to become a bit of a vulture fund and pick up some of these cheaper assets?
Well, I think if we were a vulture fund, we wouldn't necessarily be bringing our operational expertise to bear as well as our investment expertise. Our company has been involved in retirement living for close on 40 years, and we have an intimate understanding of the operational nuances of this sector, and also we have considerable experience obviously in healthcare related assets through our investments business. We're bringing the skills of both businesses together in order to apply ourselves for investor funds in this area. We're very excited by this. It's absolutely true though, there were some inappropriate financings done in the lead up to the global financial crisis in this sector. And we certainly couldn't support some of the valuations that we saw at the tail end of the boom.
Your financial planning arm is sort of at boutique levels at the moment compared to the sector, and you're looking to grow that. What are the issues of concern for you in the Cooper Review?
Well, we were really minded with the changes to regulation to actually build a financial advisory business that was equipped for more modern times. So we deliberately set about developing a financial advisory business for Australians in these increasingly complex financial times, including in relation to matters to do with retirement living.
But as things become more complicated, do you think the reforms are going to be able to cope with complicated advisories and tighter fees?
I think this is exactly a moot point. But the way we've gone about building our business is to make sure that we're not in any way hampered by legacy revenue models. So we built a fee-for-service business. And in terms of addressing potential consequences from the Cooper reviews and other regulatory reforms, well, we're very keen to see those reforms and the implementations of those reforms work through intelligently and carefully.
There's an awful lot of reform that is touching different areas of your business. Upcoming reforms, not just the Cooper Review, there's the Productivity Commission study on aged care, health reform generally. You have some concerns about the new shape of the Parliament and the ability of this stuff to get through, don't you?
Well, we're a company that's essentially linked to some of the mega trends of our times. The financing of retirement savings, aged care, the financing of healthcare, and providing accommodation for older Australians. These are very large public policy matters and complex, and they affect a huge proportion of the population and growing. And they impinge on matters as diverse as workforce planning, population planning, skills development and capital formation. So in that, I am frankly very concerned about the capacity that our Parliament in its current form will have to address these complex and nuanced policy challenges.
Mead, I thank you very much for talking to Lateline Business today.
Thank you, Tiki.